Hi, it's Charlie giving you Monday's market commentary. I hope you're very well. Before we go into that, just do a quick piece on being right or wrong. The problem with traders is that they get fixated with being wrong or trying not to be wrong and trying to be right. And obviously we have to be right a certain percentage of the time in order to be making money, but it's not the be all and end all, and yet traders get fixated by it. And I think it comes as part of life as a whole, that we're educated right from childhood to try and be right. You've got to be right to pass your exams and all of that, and so it's indoctrinated into us that we need to be right as much as possible and being wrong is bad. But in trading we need to flip that around, because actually being wrong there's nothing wrong with it. And we have to accept that we're only going to be right a certain percentage of the time, which obviously means that another percentage of the time we are going to be wrong. And I think traders get too fixated in the moment, and so they're looking at the trade that they're in right now and worried about whether it's going to work out or not. And yet the reality is, if I bring the pin up, no, it's not a pin, it's a pen. But the reality is, it's not about this one trade that we've got on right now. It's how many times we're right and how many times we're wrong over a series of trades. So let's say over the next 100 trades, or maybe even the next 1,000 trades. And that's what's much more important, rather than the outcome of any one individual trade. And so I think that's what you need to look at. If you find that you suffer with worrying about being right or wrong on a trade, then you need to put it into perspective and think, actually, I need to think about this rather than being just one trade. Don't worry about the outcome of this individual trade. That's what the risk management's for, to take care of that. It's over the next 100 trades where I know that I need to obviously have a certain strike rate, so to speak. And strike rate's one thing, and obviously risk to reward is another, because you could have a strike rate of, let's say, 30%, and you could have a high risk to reward and therefore still be making money. I know a lot of traders would find that very difficult to cope with, though, a low risk reward. So I find that most traders, let's just bring back over the pen, most traders prefer to have a 50% or above win rate, which is doable, which is more. It's obviously, it's more than doable. It's comfortable, and that way they can manage their emotions a bit more. So, and obviously a lot of traders want to have much higher win rates, maybe 60 to 70% success rates. So because they like being right, they don't like being wrong, and they can't handle that. But I think it's part of the learning process of being a trader and developing experience, that actually you get to a point where you say, okay, yes, it's great having a 70% success rate, but I don't need that all of the time. I'll give you an example. There's a trade I took last week which paid out at 4.5 times to 1 risk to reward. So obviously with a 4.5 times 4.5 to 1 risk to reward, I can afford to have a few losers, can't I, and still be net profitable. And that's what you need to look at. Is like I said, over a series of trades, looking to see if your net profit, if you have a net positive return over a larger sample of trades, rather than worrying about any individual trade. So anyway, just some food for thought there for a Monday morning. It's not going to be. There's a bit of news out this week, so we should get a little bit of movement around. It's not obviously as big a week in news terms as last week was, but nevertheless, I've got the S&P up here. It still continues to carry on trading higher, and like I said before, it remains in this trend until proven otherwise. So I'd still be looking for 2,000. It's not a bad level for the S&P to go to, is it? And so nice big round number up there. So we'll see if the S&P can get up there. And I wouldn't really be interested in the S&P until I see the 8 and 21 cross. As far as I wouldn't want to stand in the way of this, because all the time the 8 and 21 are across the upside, then it's just confirming the trend overall. But as and when they do cross, which at some point they will do, then it could signal the beginnings of a short-term or maybe longer retracement. But what you have to be careful of is that everyone's trying to call tops at the moment, because the markets have been going up for so long. And when there's lots of people trying to call tops, then what tends to happen is the market carries on going further. There's the old saying, the market can be irrational longer than you can remain liquid, and a lot of traders trying to call tops won't remain liquid if they keep on trying to short it. I tried to short it just the other week. Over here we had a key reversal day, and we had a divergence. That was a good quality setup to take. It just didn't work out. But certainly there'll be a lot of market participants trying to short just on any old whim. So I'd like to see more strength, and we'll see. Who knows? We might be carrying on going up for the next 6 months, a year. Who knows, really? When you've got such a trend in play. But yes, it's long in the tooth. We all know that, and at some point it will roll over. So we'll see. But for now, the trend remains up with the S&P. Really, there's not a lot to say with regards to the euro dollar really this week. It's just caught up within this range. I'd like to see it come down to the back down to the lower 135s and retest that zone. So we'll see if that's going to happen. Today, so far, we're having a little bounce. What's more interesting to me at the moment is probably this Aussie dollar. I think that we could have a little bit of a bounce. We've got news out on Thursday with the RBA overnight, so I'd quite like to see where the Aussie is by then, and then be looking for probably short plays. I know, so going into the latter part of this week. So we'll see if it bounces first, and then see if we can get some. If it sets up for some short plays, it might come all the way back up and go for new highs. But I like the idea of that. So I'll be looking at the structure of the market at that time, see if we've got some negative momentum, and in which case if we have, then I'll be happily to short that. And what else have we got here? Let's have a look at dollar CAD, because dollar CAD's had this tremendous run down. It's sort of stabilized a little bit here since last week. It's just sort of going sideways for the past week, so it'd be interesting to see whether the dollar CAD can get a bit of a run on. And I suspect if we can come back up and breach these highs that we had in the latter part of last week, then it'll probably have a run back above north of 107. So we're looking at breaching the highs of around about 106.80, and then we should have another run higher. If not, then it could easily come lower. So just keep your eye on dollar CAD, because it's had a good run. It may be due for a retracement. We've got some news out on CAD today, and later on in the week as well. So we'll see about that one. But for now, it's trading in the range. It needs to break out that range. And lastly, let's actually have a look at gold as well, because gold's another interesting one really. It's had this weird sort of consolidation zone. It has actually pulled back. This isn't live, this is from Friday, so it's pulled back to what, about 13.12 when I was looking at earlier. So it has pulled back a bit. We need to see if it's going to hold on to this, maybe this daily 21 moving average as and when it hits that, and then see if it can then start to build back up again. So I think gold's still an interesting one. It still may want to come back up for these old highs back over, I say old highs, but highs back from March. It may still want to do that. So I'm keeping my eye out on gold to see if, again, if I see fresh momentum coming into it on the positive side, then I would like to be on the long side of gold if it sets up in that way. Right, I shall leave that with you. Be back on Friday for live trading.